Watch out, Bitcoin. Shit is about to get crazy. According to Lark Davis, aka Crypto Lark from back in the day, he thinks that we are going to see some crazy stuff happening, and he just put out a video today talking about it as it correlates to what's going on in the bigger markets. We've talked about that in the past. It's pretty much obvious by now that there are certain factors happening in the world that obviously has an impact in terms of the dollar value of Bitcoin. If you don't know that by now, I don't know what rock you've been hiding under. But the truth is that Captain Obvious here is going to give us a rundown of what is going on in the bigger markets and how it correlates to Bitcoin's USD value, which I have some thoughts on. So I like a lot of the initial comments in terms of what's going on in the world because it is spot on. But in terms of the bigger picture, which is what you should be focused on, I think that there's a little bit more to be said. So let's get into it.
Things are breaking in the global economy. Bond markets are breaking, Forex markets are breaking, stock markets are breaking, Bitcoin surprisingly up on the day. We're going to be discussing that in today's video. My name's Lark. I make videos on investing. If you like that topic, make sure to subscribe to the channel. Leave a little thumbs up on this video too if you do appreciate this kind of content. Now let's go ahead and get into it. Let's start off, of course, by talking about this situation with the dollar. Surging US dollar is creating an untenable situation for the stock market, warns Morgan Stanley analyst. A dollar surge could lead to a crisis globally.
Morgan Stanley, we can trust those guys.
This dollar rally has been going absolutely nuts recently. Got up to 114.6 yesterday, approximately. Yeah. Been absolutely powerful watching this rally go on for the dollar, although we are cooling off a bit today. Yesterday's massive dollar rally forced massive pressure on the Forex markets, including, of course, very prominently for the euro and the British pound. It also had very big impacts on the bond markets, which is something I want to talk about briefly in this video before we start getting over to talk about Bitcoin. So this is from Jim Bianco. He is an
Okay, let's just pause right there. So he's talking about how the dollar is so strong, but he didn't get into why. The truth is that what's happening with the US dollar, the reason why it's so strong isn't because the US economy is strong. It's actually collapsing. But the fact is that all around the world, all the other fiat currencies, when valued against the US dollar, are collapsing. This is what is leading to the US dollar to having more strength. Okay? It is a very short play. As the economies around the world are continuing to feel the pain and their fiat currencies collapsing, basically it is increasing the value of the US dollar because of that. So the US dollar just isn't falling quite as fast as every other fiat currency that exists around the world. Canadian dollars, British pounds, Australian dollars, all of them are all basically failing against the value of the US dollar because of its strength. So, and it's what's causing its strength because all of them are just falling so strong. But the truth is that the US dollar isn't far behind. So you got to keep that in mind. The reason why for its strength is because all of the fiat is collapsing. That's the important thing to understand here. So let's keep going.
The lack of breaking, right? So right now the Federal Reserve is trying to break the markets, and the lack of breaking is actually causing the dollar to surge. U.S. 10-year yields rose 24 basis points today, tied for the second biggest one-day rally since the financial crisis. This was historically bad for the bond markets. This will kill equities. And if equities fall another 30, 40%, 25%, that's going to be bad for Bitcoin, most likely anyway, even though we're slightly decoupling a bit today. Break more on that in a minute, but when we see global markets tanking, I don't think crypto is going to be spared in this situation. It's just a full risk-off environment. Everybody's running away from risk, running into the perceived safety.
Okay, just hold it right there. So he's talking about risk-off assets. And traditionally, I will say that Bitcoin has fallen into that category because it is largely not been understood. My thesis, though, is that has changed in the last couple of years significantly. There is far more interest in Bitcoin. It is far less being regarded as a risk on asset. If anything, it is one of the hardest assets in this type of environment. And I think that more and more big players out there are beginning to understand that. The truth is, he's talking about how everything's collapsing. Where are you going to go? Right? And the correlation that he's talking about in terms of Bitcoin going down, that's the US dollar. The value of Bitcoin in terms of all metrics aside from that is extremely strong. So the possibility that it's considered a risk, a high risk, risk off type environment, yes. But I don't think as much of that is happening with Bitcoin. And that's why we're actually seeing Bitcoin floating around the 20K mark while everyone's screaming that it has to go down to 13 and 10 and so forth. I think that this is actually a sign of strength in terms of where Bitcoin is at now compared to what's going on in the rest of the world. Regardless, I just don't. I don't agree that it's. They are trying to break the U.S. economy. That is true, and the strength of it going on right now has to do with macroeconomics that are far bigger than what any kind of trading is going to have to do with that. This actually all correlates to what's going on between Russia and the Ukraine. Believe it or not. But that's a whole other video, and I'm hoping somebody else will do it so that I can react to it. Hint, so that we could talk about that a little bit more, because that's actually where a lot of this macro banking economics are happening. So let's continue in the meantime.
So this is a moment that has historically been very bad for markets. So that is worth keeping in mind. Dan Tapiero also saying the markets cannot handle a 10-year note moving wildly higher in yield. He said, I've never said this explicitly on Twitter, but we are approaching a full-fledged meltdown in financial assets and in the economy. Deeply unfortunate, but it seems to me the Fed has put us on a collision path with collapse. Holy cow, man. There's so many people out there warning this very thing right now. All the signs are there that things are not only bad right now, but they could be getting a lot worse in the not so distant future. Currently, we are seeing the S&P 500 in oversold territory here.
Oh my gosh.
27 on the RSI.
S&P 500.
We do have this current movement for the price where we just caught on at support here, right around 36.
So this looks like a prediction here.
Now, if we do get this idea, and this is something we talked about a little bit, and we'll expand more as we get closer to the midterms, but the midterm election bounce. Markets are really, really bad right now, but maybe they're going to try and pull out all the stops, release enough strategic petroleum reserves and try and calm markets down a little bit, so we might get a little bit of a midterm election bounce, right? So people feel generally semi-positive, or at least not completely horrible about markets before we go into the election in the USA. Maybe we get a bit of a midterm bounce. If we do, right? Things are pretty bad out there, but if we do get such a thing, then this 3,900 level will probably be a pretty interesting area to keep an eye on. They'll probably.
So I'm just having a thought while I'm watching this, and this whole prospect of looking at the markets and what's going to happen with the politics of the day and how they're correlated to these movements. I just find this so repulsive, don't you? Like, this is what the markets have been reduced to, being political games for the administration of the day. This isn't the world where it really is based on free markets anymore. I mean, he's saying it. This is what Lark is saying in this video. He's saying it's not a free market. It's all about all the movements that the gov is going to do with their money printer in order to make themselves look good. Like, imagine that. That is the world we're living in now, right now. And you look at that chart, how he's predicting that, and it's not unreasonable. Actually, everybody expects this to happen, right? Which means it probably will. And I just find it kind of repulsive that that's the way things are now. And so why would you want to continue that? Why wouldn't you look at finding a better way, finding a new way to view the world? Because continuing to look through the lens of what looks like a big crap fest, I don't get it. I don't understand why you want to continue to play that game. It is a game that's rigged. It's a game that has the rules set against you. So why continue? Why not change it? Why not go play another game? Take your ball and go play somewhere else. I mean, that's what you did when you were a kid. Why can't you do that today as an adult? Because a lot of it is because you're stuck. You're stuck in this system that makes you have to look at this crapper, right? So that's just what comes to mind as I'm watching this, and I don't have much more to say about drawing lines and looking at all these angles. If you think that this is going to be something that's going to change your life and that's going to make it better, then by all means continue. But I just find this kind of useless. So, anyways, let's keep going. Anyways,
confluence of the 50-day exponential moving average. If we do move back up there in the not so distant future, obviously, once we break support here below 36.30, things can get real bad real fast. So that's a pretty important area for us to keep an eye on. Here as investors, a further 12% down for the S&P 500 will bring us back to an important area of price support from 2020. If we get down even further, about 18%, which would put us on the initial targets that a lot of analysts said from about a week ago or so. We might see another 25% correction in the equity markets. Very important area of price support from June 2020, as well as price resistance from mid-2019.
Price support.
Now, Jim Bianco also saying that the S&P 500 price is only down 23.3%. He says the only worst years year to date through September 26th have been 1974, 2002, and 1931. So the 70s had a very bad recession. 2002, this was post 9/11, post dot-com bubble markets.
I can appreciate the comparisons with pulling out all these dates where there were these bad times for the markets and whatnot. Doesn't really say anything though. I mean, anybody can cherry pick a bad day and then just say, well, here's what happened on this bad day and here's what happened on that bad day. It's just history. So I don't understand how it's supposed to validate the point that it's the worst ever of this and this and that. 1974, yep, here's what happened on that bad day. And 2002, here's what happened on that bad day. And 1937, like there's literally like 25 to 70 year differences in those dates. Like what's that supposed to say? Oh, 96 years, so it just doesn't validate a point at all. It's literally random points look at that chart. Look at that chart. It's just random points in a long history. It doesn't mean anything. So I don't know why this should mean anything to you. So
Afghanistan, Iraq war coming, all this stuff. 1931, of course, right in the middle of the Great Depression. So this is the fourth worst year right now on history for the S&P 500. So not looking super awesome, right? You can see most markets years end up in this range right here. We are down in the range where it's bad. It's bad. Long story short. We are seeing a bullish engulfing candle potentially forming up here for the S&P 500 mini E futures. That could be a indicator, of course, for why we are getting such a nice Bitcoin rally coming in. There could be the anticipation that when markets open up, we're going to see stock markets rally. We've had this really bad day for Forex markets and for stock markets in general. We came down, we hit that area of price support. Now we might get that bounce upwards. Now look at what Bitcoin has been doing in response to all this. It's been pretty awesome.
So he thinks the current rally is because of the S&P 500.
Here at $18,600 approximately. We came back up. We've cut over our first area of price resistance around $19,500. Obviously, we still need to close the daily candle above that. A lot of time, a lot of things can happen between now and the daily close here for Bitcoin. But we are now coming up into a very interesting area of price resistance for Bitcoin. You see this area around $20,500, and we're currently at $20,250 at the time of recording this video, but this area around $20,500, that has been a very key area of price resistance recently. It also gets us very close to lining up with the 50-day exponential moving average at $20,650. Now that 50-day exponential average, as we've been talking about, has been acting as a major area of price resistance. We can see every time previously where we've had these moves above the 50-day exponential moving average, it has acted as a strong area of rejection. Any rallies above it have been very short-lived. So now, if we're watching this, this becomes a time for a bit of caution, right? We want to watch and see if we get rejected here at $20,500.
Okay, all this technical analysis stuff. drew some lines on a graph, showed you the moving averages. That's all fine and good. But honestly, this isn't going to change your life. I think that there's just way more interesting things. The S&P 500, he's saying that, because of that, we've had this big rally. Honestly, I think by now that rally has probably been completely exterminated. Whether it has something to do with the S&P 500, who cares? I understand. You may find this interesting. You may think that this is something that's important in terms of the dollar value of Bitcoin. The truth is that as far as like the movements go and all these market manipulations, let's not call them let's not call them markets even, let's just call them manipulations. It really doesn't matter. And honestly, like when I start to see charts like this and all this technical analysis stuff, I understand that there's certain value to it. So I'm not completely knocking it. But in this case, when it comes to what we're thinking about here, about what is really going to matter in the long term, this sort of thing isn't going to make a big difference unless you are looking to do some kind of swing trading or something like that. Maybe using the link in the description, which he's promoting as part of this. That's maybe why he's going on about this, because then you might be tempted to go and make a trade. I really don't recommend that, especially when you're dealing with market forces that are manipulating it in such ways where you are the last to know how the story goes. They're making the story, and you're the one they're the ones that are putting in all the billions of dollars in those markets in order to be able to take your trades. So I would advise to be extremely careful and think twice before you think that you should be following the squiggly lines on the screen. So, so we're just going to go fast forward through this because I'm going to fall asleep if I keep watching. It ends at about 9:51. And go. Pause 10:04. Okay, hold it right there. Our fate is so heavily tied to everything that is happening in the markets. This is the everything crash. See, right there, that's the problem. The idea that our fate, that Bitcoin's fate is somehow tied to what's happening with markets that are tied to the US dollar is not where we need to be in terms of how we're moving forward. We need to start thinking about things in terms of being outside of the system. So what needs to happen is stop looking at Bitcoin in comparison to what's happening in the system. A Bitcoin is a Bitcoin, and it always is. Remember that. Whatever US dollar, Canadian dollar, Australian dollar, British pound, euro, whatever you put against it, that is the value of the fiat that is being given that value today based on this kind of stuff. That is not what the value of Bitcoin is. A Bitcoin is a Bitcoin. So if you can keep that in mind, if you can remember that, and you can think about the fact that there's only so many of them, it's a very scarce resource. It is a solid asset. It's the only one that you can keep that can't be confiscated by somebody with force. It is the only thing that is able to cross barriers or cross borders. It's the only thing that really, I think the world is going to come to a consensus on in terms of what they can trade in good value that everybody can have consensus on and not be manipulated by. Then that sounds like a better deal than what we're looking at now. With everything that he's talking about, the shit's about to get crazy, all that stuff, that's all because it's part of the plan to be able to collapse the economy and try to keep the fiat going. So I just don't know why you'd want to continue to play that game. Lark Davis is helping promote it. That's not cool. Regardless, some of the points he made about what is going on just helps you to be aware of the way things are going in the world. Just do your part in terms of not participating. You don't have to be a part of it. You can be a part of doing something better. So those are my final thoughts on that. I think that when it comes to the big picture and what's happening with the economy, it just means it's that much more important that we look at alternatives with Peer Plays. That's exactly what we're doing in terms of our mission and our vision and what we're building in crypto. We want to see a world where this kind of stuff, this kind of manipulation, isn't a part of our lives. Instead, we can focus on building better ones that we all have consensus to, and we're not just simply doing the bidding of bunch of unknowns that are just deciding these things for us. And of course, not feeling the pain in terms of trying to keep their fiat power alive. So if you like this video, please like and subscribe and all that great stuff. Share it with your friends. Talk about this. Feel free to leave some comments in the comment section to tell me what you thought about this. If you think that this is what's important, or if you agree that we should build a better future and focus on that instead of playing these silly games, then be sure to join us here in Peer Plays, because we'd love to have you. So until we go and look at the next one, have a great day.